everyone, welcome back to ASX Market Watch. Thank you so much for joining me today. It's really great to have you here. What we're doing is we're checking out all the indices around the world, and we're using charting tools that you can take and use straight away in your own charting or in your own trading and investing if you want to as well. So really valuable stuff, guys. What we're going to do is we're just going to jump straight into it because we believe that 3 out of 4 stocks might follow the overall index or the overall market, and if we know which way the overall index is heading, then we have a good chance of determining which way 3 out of 4 stocks might be heading as well. So it's not rocket science, but very simple, and the charting tools we use are very precise and very simple as well. And we're actually adding one. We're looking at the BSE from India today as well as the Hang Seng, the Shanghai Composite, all ordinaries down under, obviously the FTSE in Europe and the Dow Jones in America as well. So fantastic stuff. The first one, let's just jump straight into it. It's the Shanghai Composite in China. Obviously, people aren't really watching China as much lately, which is, a good or a bad thing. But what we've got is basically over the last few weeks we called a short-term entry signal, or a short-term uptrend basically. The reason being it crossed the downtrend line here, and then it made a higher trough, and then it went through the previous peak. What that signals is a trend change, and it also signals that there are more buyers supporting that move. And what's happened? Well, the market has continued upwards. So the market is still rocking in that short-term uptrend, and that's been over the last probably 2 months now, which is fantastic. So that signal is holding true. And what we've got in the future, guys, just to be cautious, is this is a little medium-term downtrend line. You'll find that this might provide resistance in the future around 3100 on the Shanghai Composite in China. So that is coming up probably in the next couple of weeks, something to be wary of. That's China, fantastic. Let's check out down under Australia, because this is the country that I trade as well. This is the market that I trade, and fantastic stuff is the All Ordinaries down under Australia. What we said last week was a really short-term entry signal based on the top of this bar with your stop loss at the bottom of the bar. Not rocket science, but the reason behind it was it started high throughout the day, and then it went quite low. Actually, it found support at the same place twice, which is a good sign as well. But also it came back and closed on its highs. So that was our really short-term entry signal. And what has happened since then? Shablam. The market has continued upwards in a short-term fashion as well. Now, something to be wary on the All Ordinaries at the moment is it's coming up to this short-term trendline resistance as well. So this is basically because what we've had is this, because we've had these falls on the All Ordinaries, we now have a scenario where we've got short-term trendline resistance coming up. So that's going to hit us at around 4,850, something to be mindful of, but the market seems strong at the moment, especially the way it's just bounced off these lows. So basically still on a short-term basis anyway, it's definitely in a short-term uptrend. So that's the All Ordinaries down under. Next one we'll look at is the Dow Jones, and the Dow Jones is really fantastic because what we've got is over the last couple of weeks we called a short-term exit signal, and what happened, the market did tend to fall, but not very far, guys. So fantastic on the Dow Jones. It did fall through that upwards trend line, as you can see, and now the market has continued back above that line. So what that does is that negates the signal. So that signal is no longer valid. The market is continuing in its uptrend. Now what that means for us is that we can actually flatten our trend line as well. So now here we go. We've got a flatter trend line. That means that we've got much more room for the market to move if we want to, and that will mean we won't get as many whipsaws in the future, so we won't get in and out of trades in the future as well, because we've got that flatter trend line. So that's fantastic news, and that's very simply on the Dow Jones. Obviously the trend line that we called the current move from was way back in August September 2010, and before that we actually called it back in mid 2009, all from simple trend lines. So this is really good news that we can actually flatten our trend line, and now we won't get whipsawed in and out as much on the Dow Jones. Fantastic stuff. The next one is the FTSE in Europe, and really quickly we've been looking at this broadening wedge pattern here. The broadening wedge pattern is one of those tools that, especially on the All Ordinaries, it tends to find support as the wedge goes on and on and on. So as you can see, it gets wider and wider, and the support tends to get wider and wider as well. So what has happened on the FTSE is that the market has found support at the bottom edge of that broadening wedge. Now it's continuing upwards as well. So it's made a little zigzag up. That's a short-term up signal, basically a short-term uptrend signal on the FTSE. So what has happened is the highest probability move is that the market can often shoot below the bottom of this wedge here. Now, because we've had this short-term uptrend signal, that's not expected to happen, or it's not likely to happen on the FTSE at the moment. Obviously, guys, if for the canny amongst you, we've still got short-term resistance at around 5,950. So 5,950 on the FTSE is the level to beat at the moment, and as we can see, it's still trading in that broadening wedge formation, so in that little sideways range there as well. Really quickly as well, the Hang Seng in Hong Kong. So the Hang Seng as well has bounced back. What we actually had last week was really simply, it broke down through the trend line, as you can see here. However, it was saved by this single bar because it closed well off its lows, and then the market could not actually close below that bar, and now it's starting to rise again. So what it is doing is starting to rise back into that consolidation period. For it to be in an uptrend, we'd sort of look for a close above 24,000 at the moment. That would signal a breakout above this little consolidation pattern on the Hang Seng. Until then, it looks like more sideways movement for the Hang Seng. Second last is the Nikkei. Obviously, on the Nikkei, we had a short-term exit signal right before these falls, at least 2 or 3 days before the falls. As you can see, if I just enlarge that, really simple. It crossed the trend line and it made a zigzag pattern down. So we had a couple of days warning there, but I had no idea how fast and vicious the falls would be. What we've got now, as we said last week, we could have had a short-term, again, same as the All Ordinaries, a really short-term entry signal based on that single bar. And why is that? Because it started high, went down throughout the day, and then closed high as well. And as you can see, the market has continued to rise since then. What we've got now is almost a little zigzag pattern up, so that is almost forming there. And if I just give us a bit more room. There we go, beautiful. So as you can see, we've got our up move, we've got one down bar which forms a trough for us, and if it closes above 9,600 on a daily price, that would be on the daily charts, that would basically be a short-term uptrend based on the Nikkei there as well. But it's not there yet. Last but not least is the BSE 30 on the Indian markets, and basically this was just requested. What we've got here is this little zigzag pattern up. What that means, this is a daily chart by the way, if we look at it on a weekly chart, guys, really simple. We've got a little zigzag, but then we've got a higher trough, and then it's closed above the previous peak. So what that is a Dow theory entry. Based on Dow theory, that would expect the market to continue in an upwards fashion. And what we've got, if we were to look at it from an Elliott wave point of view, as you know, Elliott wave goes in 5 waves. So we've got 1, 2, 3, 4, which is a sideways movement, and then 5, and then A, B, C correction is usually down. So as you can see, we might be expecting an A, B, C. At least if you were to follow Elliott wave, that's the high probability move according to that theory there. So that has been ASX Market Watch. That's been the world from a chartist point of view. As you can see, we use a whole bunch of different tools, really great tools for charting, and you can obviously get more on that at asxmarketwatch.com. Check out the site, there's a whole bunch of free stuff there. Apart from that, I will see you next week and more markets around the world from a chartist point of view. Until then, guys, happy trending and bye for now.